Before we get started, likely, Jim, just so you know, I'm probably about to go on a bit of a rant. If you have anything you'd like to start off with in relation to gold and silver, you're welcome to do it.
Well, I will mention that gold equity sure got beat up after Wednesday of this week. Prices that I just don't think are realistic. They're just too low. I think it's a pretty good time to be looking at your favorite miners right now.
I agree. I think opportunity is approaching rather quickly. I think when it comes to commodities broadly, I think we're coming up to a big opportunity. I think a lot of people are going to get scared and miss out on this, but I anticipate a bottom here very soon if we don't have it already. I see a lot of relative strength in a lot of commodities broadly, from the gold and silver sector. Even in agriculture, saw a lot of relative strength that looks pretty good. I think as the markets are getting kind of scared with the hawkish Fed talk and everything that Powell came out and said, which, by the way, I kind of want to talk about this for a second. So a takeaway from Powell's speech that I haven't heard anybody talk about is the fact that he admitted that much of our inflation, which is true, is supply side, and that he can't do anything about that. He actually said that. He said those words. But he also countered to that. He followed up and said, well, even though there's nothing I can do about that, we're going to go ahead and raise rates anyway, because that's the objective. That's the goal. And since inflation is high, we're going to do our part to stop it, even though we can't stop supply side inflation. And I think that that was a big deal. I can't believe anybody's not talking about this. But I think that that was a big tell. And he also said that inflation was reflexive, because the more people expect it, the more it becomes a self-fulfilling prophecy, which is true. And it's also an admission, I think, in my mind, to the degree that they're using psychology and narrative to change behavior, right? Because they know they can't actually stop this stuff, and they admitted it. They admitted it in the speech. It was like an 8-minute speech, and he said those two things, which were a testament of how much power he actually has, which is very little, because much of our inflation is supply side. Powell can't do anything about Biden's policies. He can't do anything about sanctioning Russia and all of their resources. He can't do anything about the permitting of oil here domestically. He can't do anything about any of that. And he said as much. So that's really telling to me, because I think that he's using this as an opportunity to swing his hammer one more time, to have it as much of an effect as he can while he can, as things kind of start to crack. And it is, in my opinion, that as much Fed attention as the Fed is getting, it's time to kind of start pivoting from the Fed. And I think the reason for that is because I think the cake is baked in their regards and what that they can do. I think the damage that they are likely to cause is already kind of in, and we're simply waiting for the revelation of which domino falls first. I am of the mind, and I think that I can quantify how things will start breaking globally before they start breaking here. I understand and appreciate that we Americans look internally. It's the easiest place to look, right? You turn on the television or open an article, it's right there. They're talking about the United States, but things are really starting to crack in Europe. And I just don't see this going the way people expect it to. In fact, I see a big move up in commodities coming pretty soon. All of the Fed's policies are going to do not a whole lot to stop the inflation that we're experiencing, but it will be a boon to commodities, especially as they take liquidity out of the system that could go to CapEx. I just don't see. I don't see how the Fed has much rope left because of the energy crisis. And the yield curve is completely broken. It's a policy error on behalf of the Fed. And the bond market knows this, because the bond market understands the situation too. We have priced in recession. I think we're already in the recession. We've already got those Q2 numbers. They were revised up, and they were still negative. The economy is rolling over. I think we have a lot of problems in housing. I think that you're seeing a lot of signposts like this student debt forgiveness. That's a mile marker to me. That's a signpost to where we're going. I think that's a really big deal. That's extremely inflationary. This will continue to drive up debt. This will drive up cost of tuition. Everything that the Biden administration is doing is inflationary, and it stands in stark contrast to the Fed and what they say their goals are and what they're trying to do. These are opposing teams. I mean, the Biden administration and the Federal Reserve are essentially going in opposite directions. And this is why when I have guys on like Keith Weiner, I make it a point to ask him, if the Fed is the elephant in the room that gets all of the attention, is the mouse the elected Washington policymakers who have all of these fiscal budgets and decisions to make that are going to make inflation impossible to stop. Not only in the ways that they spend money and run deficits, but in their policies in relation to foreign policy too, or in terms of domestic policy and drilling for oil, et cetera. I think that in my mind, the narrative of the Fed has kind of run its course. So whatever they're going to do, whatever their intentions were, I think we've reached kind of the peak of this whole Fed narrative. I think it's time to start looking forward to the next thing. And I think the next thing is cracks forming, cracks growing, and stuff actually starting to break. And the dollar strength globally is taking a major toll on Europe. In addition to their already existing energy crisis, you have expensive dollars, which they need to buy expensive oil. These things are compounding. You look at the energy crisis over there in terms of just electricity. So this is something we had brought up here on either the first or second episode of the Gold and Silver Spaces. We had talked about, just me anecdotally, our electric bill doubled. All right, I'm in Texas. So we went from 8 cents to 16 cents. And that was a big deal. And as soon as it happened, that was really an orange red flag to me, because I knew what it implied. Because I knew in that moment that just because my bill doubled, maybe my neighbors hadn't yet. We're all kind of riding the same roller coaster, right? And I might be on the front of the roller coaster kind of going over the hill already, but, my neighbor might be on the back and he's still going up the ascent. So we're all on the same ride, but we're on, different phases of the timeline on that ride. And we're experiencing different waves of the same ride until ultimately, we kind of level out and we all get on the same playing field and everything catches up to everybody. But there is a lot still to come that hasn't hit everybody yet. And let's say my neighbor still has 6 months left in his contract before he renews. Well, I don't think he's going to escape anything, because maybe 6 months from now, instead of paying double the rate, maybe he ends up having to pay triple. He ends up having to pay that in the future anyway. So I don't think anybody's necessarily making it out of this. I think the more things get delayed for people, the more it's going to hurt. And I see a lot of problems in housing, and I try to talk to this to people, and I read a lot of experts that I follow. And to the best of my ability, it's hard to find people who reference housing without talking about 2008 and saying that it's not the same. I think that's true. It's not the same. The situation is entirely different, and we have new problems for entirely new reasons. And for example, I'm a Texan, okay, like I said, and we have property taxes here. Well, you have to appreciate that if someone had bought a home in the last year or two, that home has experienced significant appreciation in that timeline. And when they went and bought that home, it is likely that their tax assessment did not incorporate into their monthly payment. I've seen this happen before. So they go and buy a home for, let's use nice round numbers, $130,000. Well, maybe a year ago it was $100,000. And so if their bank failed to account for that in the escrow, by the time next year comes, they might actually owe a back payment to their escrow to make up for what wasn't accounted for when they took the loan. In addition, for the additional costs they're going to have to pay on their mortgage for their new tax appreciation that they're paying for. And so in the state of Texas, let's say 30% appreciation on a home is quite a lot, especially in a short amount of time. Well, the state of Texas, for example, cannot come from more than 10% of that appreciation at a time, which means you have years and years of appreciation on your mortgage payment built into the system already. And on top of that, because commodities are so expensive, whether it's the lumber or the copper or whatever else, the cost to build a new home is also up. All right. And so the insurance cost that you're paying on your home is going up too, because the cost to replace your home, should you lose it, should it catch on fire, has to equate to the rebuild cost, which is up. So everything is up, and so higher and higher mortgage payments are kind of built into the system already. And so you have to appreciate that for another reason, because people don't buy the home that they can afford. They buy the home that they get the loan for, right? And people always buy as much home as they can, and you're buying that monthly payment. And so when people bought that monthly payment, they were expecting it to stay static. Now, obviously, if you're in Texas, you understand that the property taxes exist there. But I guarantee you 95% of these people didn't appreciate the fact that it was going to take years for these appreciations to catch up into their monthly payment. And so not only do you have increasing monthly payments over time, but now you have doubling, tripling electric bills on top of that, in addition to your food inflation. So as these costs start to catch up to everyone incrementally and eventually in totality, I think you're going to start seeing cracks develop. So again, just anecdotally here in my area, I live in a pretty nice area. I got a pretty nice neighborhood here. And just recently, there's a good dozen homes that have popped up for sale. And I think that things are starting to cascade. At the end of the day, somebody's going to be a loser when people's monthly income are inadequate to meet their monthly obligations. I mean, somebody is going to lose out, whether it's the mortgage, right? Whether it's the car payment, right? Something's going to give. Because as these costs continue to go up, and they're not going to stop. Here's the big deal about the Fed and inflation, is that they admitted that they can't stop it. They know that this is supply side right now. So they're not going away. These problems are only going to get worse. Food, we're experiencing massive drought globally. California had the worst drought since the year 800. Since the year 800. Europe's drought, I'm looking at an article here, is the worst in 500 years. I'm going to nest a picture for you when I stop talking so you guys can see. There's a gentleman standing in China's largest freshwater lake, and it's a desert. It's a complete desert. So you have these environmental factors taking place in and of themselves, alone, by themselves, in addition to these policy decisions like the sanction on Russia. And we don't have access to their fertilizer. They supply 40% of the world's potash. You understand? Between Russia, Belarus, Ukraine, I mean, they account for something like 87 metric tons of grain exports. These are massive numbers, and we no longer have that in our supply in the West. It's gone. And so not only is the drought going to affect crops, which it has, I think crops in Texas, the corn crop is down some 40% just this year. But you're going to have lower yields anyway because you don't have the fertilizer. And not only will you have lower yields, you're going to have lower nutrient density because they lack the fertilizer. This is a problem that is baked into the cake that we're just getting a taste of. This is going to keep getting worse and worse and worse. It doesn't matter what the Fed does anymore. I'm over it. I've seen enough. Based on everything else that's happening, they could do whatever the hell they want. The system, we're already rolling over the top of the. Go ahead, buddy. You want to say something?
Yeah, this might not be a popular opinion, but I personally think it's just fear mongering that's going on right now. Yes, there's something going on in the system. The supply chain is affected. Companies can't get contracts filled because they don't have the raw materials, whether it's fiber or chips and stuff like that. So there's something going on. However, I think it's just a blip in the radar, and it's going to reset itself, and we're just going to get back on course and have another great run of 5 or 6 years of economic prosperity, right? So I think it's just another 2008 2009 scenario, and we can blame the pandemic for this, but that could be just an excuse for this little reset that we're having. And I'm not a conspiracy theorist, but I do think that there's always a plan in place, and this is a planned reset of the economy worldwide. So I do think that's true. And it sounds like the things you're speaking about the drought in China, I know what you're referring to. It's the largest fresh water lake. I think it's been like that since 2012, right? So it's not new. It's not new things, right? And there is droughts happening in California. That's correct, but that's due to large-scale farming of avocado and pistachios, large foods that take a lot of fresh water. So there's a lot of components there that it affects those things. So as well, California too. It's not properly managed, the water there. So they have issues like long-term issues with water management, and it's been a standing case. So it's not something that just popped up. This is just my opinion, uninformed opinion as well. And I do think we are going into a hyper technological um, revolution, I would say, whether it's going towards Bitcoin, crypto, having more gold involved and silver, like your title here, into the economic system that we're in, because there is something wrong with the physical currency of U.S. dollar, and currency, paper currency. So that in itself could change, and we are seeing it with you know um, cardless payment transactions, right? Tap, right, and all these things, and app payments, and etc. Apple Pay. So we've seen this in the last 5 years. So there will be a big shift, like when they introduced, interact, what do you call, um, like app to app payments. Like you could transfer money between apps, right? So that now is normalized. Before 5 6 years ago, I would say 8 years ago, that was non-existent. Now it's prevalent and it's normal, right? So we are going to see a shift, and I would say we're going to shift it to more cryptocurrency and on the blockchain, and it could be any currency. I'm not sure what it's going to be. It could be a government-made currency from the U.S. government or countries or different governments, but that's what I think the shift is going to happen, the major shift, in my uninformed opinion.
I appreciate you coming in with your comments there. I will push back on you a little bit. I mean, first of all, farming doesn't cause drought. So they do have mismanagement of their water, but this is a rain problem. It's a drought, okay? And it's a 20-year issue. So this is the culmination of 20 years of a lack of rain. And you were correct to point out China, but it's a testament of a larger issue at work here. That's the Fed can't print rain. Okay, so there are a lot of things that are policy driven, just like COVID. COVID didn't do anything to shut down supply. Our policies did, right? There was just a virus, but it was our policies that told people they couldn't go to work. It was our policies that kept people home. It's our policies that shut down businesses. It's our policies that sanctioned Russia. So these little incidents aren't the responsibility or aren't the cause of anything. It's a policy error that we've been making. Go ahead, Jim.
Liberty, I just wanted to, in support of what you're saying here on the drought, if you Google, I use Bing, but if you Google cloud seeding in China, they've been active this summer trying to seed their clouds, trying to more or less make rain, not a rain dance, but using technology. And you wouldn't believe it if I tell you they're using silver iodide.
Yes, I'm familiar with that. They've been doing that for years now. I remember they tried to make it rain prior to the Olympics so that it wouldn't rain during the Olympics. So yeah, I am familiar with that. It is a good point. It is really fascinating that we can do that. So I'm glad you bring it up. But beyond that, to talk about what the rest of you had said there, Thought, I do think that central bank digital currencies are on the way. And I think, if anything, if they do come, it's a testament to something like Bitcoin or blockchain not really having a chance. I mean, let's talk about Russia again. Look at what happened when the Russians tried to run to Bitcoin during the onset of these sanctions. They tried to take their rubles and turn them into cryptocurrency, and the West shut them out immediately with the flick of a switch. They cut off all the on-ramps, right? And that's just a testament to how fast that they can block you out and cut you off the entire system. I can appreciate people who like Bitcoin. I mean, if you like Bitcoin, I mean, I think you're on the right track looking for an alternative to fiat, right? But I don't buy it. even on cold storage, let's say you had it on cold storage, what are you going to do with it? If they shut off all the on-ramps, you can't turn it into a currency to trade with, and nobody else is going to trade your Bitcoin. And why would the miners even be operating the network anyway if that happened? So I'm not a buyer. I'm a massive skeptic of it. Not to say I won't trade it if I see potential here on some kind of a Fed pivot and some kind of a narrative of reinflation here. But I don't think it's a solution to anything personally. Digger, did you have something? Okay, Thought, you can go ahead and respond if you'd like.
Yeah, for Bitcoin specifically, I'm still on the fence with Bitcoin. This is only because we don't know who really owns Bitcoin, right? And until the world figures out what they're doing and what countries are going to choose what their cryptocurrency is going to be, I'm not sure. I'm curious what country is going to take Bitcoin as their sole currency. There's already El Salvador, I guess, that took it, and a few other countries, but a superpower of taking Bitcoin, I'm curious to see what would happen. And I'm still on the fence though. I wouldn't put all my eggs in the basket, but I would buy at least Bitcoin just to see what happens.
Yeah, I don't think so. It's not really working out for El Salvador. They're already in the hole quite substantially from their purchase price. Something that volatile and unstable like Bitcoin is does not serve as money or a reference to money. It's not the definition of money by any stretch of the imagination, and it will never stand. So until something dramatically changes about that, at the bare minimum, it's not an option. Go ahead, Bitco.
Hello, I'm a Bitcoiner and I agree with what you're saying. BTC is not Bitcoin. It doesn't match the white paper, and I think it's moved into the realm of a Ponzi. But that's not why I raised my hand. I agree with you on the drought. Germany, the Rhine River, they can't move product up and down the Rhine, and they've from nuclear to coal, and they can't get coal to the power plants. And Europe is really hurting with the energy crisis. Utility bills are going up like 10 times, and the economy runs on energy. And the S&P 500, this is going to affect the U.S. I've heard that 25% of the companies in the S&P 500 are either based in Europe or have earnings out of Europe. So this is going to be a problem worldwide. So I'm just want to confirm what you were saying about that.
Yeah, thank you. That's an excellent point. I'm glad you brought that up. Obviously, it stands to reason that these problems are not something that monetary policy are going to fix. However, monetary policy has been bad enough for so long that it's not going to help either. And so I think it's really time to ring the bell, kind of sound the alarm with a clarion call that it's time to get prepared for the inevitability of what's next. Like I say, I think this cake is already in the oven. There's no time to change the ingredients anymore. We're going to have to live with what we got. I don't think it's a time to whine. I don't think it's a time to complain. This is not fear porn. It is a recognition of reality. And as grown men, we can assess the situation and prepare for it accordingly. And I think that that's possible. And one of the avenues that I take to prepare for this is gold and silver, to have hard assets as an investment hedge to collapsing fiat and untrustable governments. And I think that we are on the cusp of a commodity boom that hasn't been seen in generations. And I think it is quite literally going to be the super cycle you've likely read about. I think that we have taken a nice break over the last few months, especially. I mean, gold and silver in particular have been on a break for about a year now. And if not, well, it's about 2 years now. We're setting up with some strong technicals on the backdrop of some extraordinary and unprecedented fundamentals. And I think the strength that we're seeing in the market right now in commodities is a big testament to where people are going to start putting their money. And remember, this is something that I pointed out before. I don't know where the S&P is going to go. And quite frankly, in a way, I don't care. I don't invest in the S&P. I'm choosing my allocations of my resources very specifically in a hedge against everything we're talking about right now, right this very minute. So I'm investing in metals, I'm investing in agriculture. Long term, I do still like things like copper because I think the response to this, I think what happens next, once things start rolling over and things start breaking, they really will have no choice but to turn the printers on. And I mean, look, China built these ghost towns, these ghost cities, these bridges to nowhere forever. And once again, they're tearing it all down. They're tearing it all down. Their investors got hosed, right? This money was completely taken out of the system. There's no product to show for it. And now you have an empty lot to do it all over again. I think it's pretty clear what the intention is and what the plan is, what the response is. I don't think it is lost on sovereign leaders. I don't think it is lost on central banks of the reality of this sovereign debt crisis. I think they're fully aware of it, and I think that they're prepared for it. The thing to understand here is the difference between the reality of what we're talking about and the narrative that they want to sell you, the narrative that they want you to bite on, right? It's the story that they want you to believe to sucker you along on the ups and downs of the whole process. And this is why I say that in terms of the Fed, in terms of Powell, this is true too. There is a reality of what he can and can't do, and he admitted it, and nobody's even talking about it. And I can't believe it. 8 minutes. It's not like there's a whole lot to pick out. And it's like the second and third thing he said. He said, I can't stop supply side inflation, but I'm going to raise rates anyway because that's my job. It's purely narrative. He admitted to the psychological aspect of this to change people's behavior. That's all it is. I think that you got to appreciate and remember that as they nuke the economy, as they nuke asset prices, as they nuke the stock market, that the tax receipts for the federal government go down. Okay, the government will take in less revenue. As the price to make up the difference goes up, this is unsustainable. All right, this doesn't have a whole lot of rope to it, is my point. And I think what you can look forward to in the near future is this crisis in Europe. I think that's the first domino. I think that this is where it all starts next. Imagine, I know how I feel. I know how I felt when my electric bill doubled. Imagine how these people must feel to have it go up 10 times. 10 times. This is not sustainable.
Exactly. And in addition to that, the DXY is the strongest it's been, and that's hurting emerging markets where they have to trade their own currency for dollars. So it's hurting the balance trade. The dollar index has to come down, and the dollar's the cleanest shirt in a pile of dirty laundry. I hear that all the time, and the fiat system is based on confidence, and pretty soon people's confidence is going to collapse.
That's exactly right. That is very well said. That's exactly the situation. And this is what to prepare for. And this is part of this is part of the Fed's game. This is part of their narrative. This is part of what they're doing. It's to hold confidence in the system, to say that we have tools to fix this, right? We can do this. We have a role to play here, and to save their credibility in the dollar system. But this is collapsing rather quickly. I mean, and out of necessity, to add to your point here, a lot of these countries, European countries, the Bank of Japan, China, they're dumping their treasuries hand over fist, not even necessarily because they have to. And the Bank of Japan has now printed $1 quadrillion. And so they're dumping their treasuries to come up with the cash that they need. And there's a direct correlation to the dollar and the yen in inverse directions. And the yen is collapsing. It is absolutely collapsing as they print into oblivion. Go ahead, Thought.
Yeah, no, these are excellent points, and I'm a historian in a way, and I look at past history and how the world reacted to big, large scale events, right? So the whole Ukraine situation, is causing, high energy prices for the rest of Europe, whether it's Germany or the UK, etc. But we've seen this before. If you look at what Russia did back in 2013 invaded Georgia, basically took over Georgia as well. It's the same thing. So you have to see what the playmakers are doing. This has been decided by countries in the world after a large scale recession, which is 2009, 2008. Countries like Russia need to recoup the losses of that, recession. So that is, I would say, a caveat to that, to give them Georgia to recoup the 2009, 2008 losses that Russia had. The U.S., of course, bailed out everybody and did their financial tooling and recovered the country economy. So this is something that's happening again. COVID, whether everyone likes it or not, had a huge effect on supply chain and shipping, and countries shut down for months and months. So if you shut down a country for months, it's going to have a large effect. People are not going to work. People are at home, stuck at home, and buildings are empty, shops are empty. This has a large scale effect to the national economic health of a country. So several countries, like Russia included, and the UK, had large effects, and they're impacted by this. So I think Russia invading Ukraine has been agreed on by the world leaders and saying, "Hey, take Ukraine. This is going to be your recoup for the losses that you made." And this is what's happening. We're going to see Ukraine be taken over, a piece of it, and then there's going to be agreement, and Russia's going to take that, and that's it. We move forward. So I think this whole thing that's going on is just another repeat of 2009, 2008, right? It's the same thing, fear mongering, and it's going to reset again, and it's going to get back to normal for another 6-7 years. So, my personal opinion, I think there's a lot of things going on, whether it's currency related, economic situations, different types of countries. Japan is affected, but these countries are going to recover. They're going to recover, and they're going to rebound. And if some of them are not going to recover, they're going to collapse. That's true. Some are going to collapse, but the United States is not going to collapse. Europe's not going to collapse. And there are going to be emerging markets that are going to surely be affected. And they're going to have to, deal with the consequences of the, this pandemic that caused, this ripple effect. So this is my opinion. I think this is just another, example of 2008, 2009, because the same sentiments that I'm seeing right now in the news of, oh my God, mortgage rates are high, interest rates are high, people are losing their homes, etc. All these things. It's happened in 2009 as well. Same thing. So I think it's going to recover. I would say in the next 5 months is going to start recovering. Everything's get back to normal, and we'll see a big change. And if I'm wrong, hey, it is what it is. Things are going to collapse, but I think everything's going to recover.
I respect your opinion. I think you have a lot of good takes in there, and I'm a big fan of history too, especially cyclical history. I think cycles are very self-evident in nature, whether it's the weather, whether it's the solar system, whether it's the human body, whether it's plants and life and death. I mean, your cell phone is going through thousands of cycles right now. I mean, you put oil in your car, you use it, you drain it, you put more oil in it. Everything's a cycle. Everything in the world is a cycle. So cycles are fascinating to me because they're just a part of our system, right? So I'm with you there. I think they're a great way to anticipate future events because they do tend to repeat and often rhyme. I think if you had talked to me maybe 6 months ago or more, I probably would have agreed with your take on the way we leave Ukraine. I actually had put out a video on this. My opinion is the way that this would end was that you'd have a deal east of the Dnipro River, right? They'd get Mariupol, pretty much the eastern side of Ukraine, and that would be it. I mean, Russia, I don't think ever had any intentions on doing anything west of the river. First of all, there's insurgency over there. It's too hard to control. You need too many boots on the ground. It was unrealistic in the first place, and I don't think they have any interest over there. Their interest is in the east side, Luhansk and all the rest. But I'm curious now if that's still the case, because as this escalates, I don't think my position has changed on what Russia wants. I think it may be evolving in terms of what the West might do. It's difficult to discern. It's very muddied waters over there right now. But to me, it feels very much like a proxy war with Russia through Ukraine. And it does feel like the global leaders, as you had alluded to, are moving their pieces around on the chessboard and setting up for a larger play on a macro scale. Everybody's doing it, and you can really feel the pressure. I think it's almost self-evident that everybody's preparing. I mean, you have a lot of leaders now, especially in Europe, sounding the alarm about how things could go here. They're warning of revolt. They're warning of riots. They're warning of the end of the good times. I often kind of say that here in America, we've already eaten the fattened calf, right? Like the best of times is kind of in a way behind us because all the cheap oil is gone, all the cheap energy is gone, right? And we have all of this debt as the cost to do pretty much anything is going up. We have put ourselves in a pretty impossible situation to get out of. And so I kind of disagree with you there on everything kind of recovering. I think we could be in for a decade or two of some pretty tough times. And it's really because of that debt. These sovereigns really have no choice but to default on this debt, either through outright default or through inflationary means. And there's historical precedent for both of these things. But most of these Western nations are over 125% GDP. I think the United States just came back down to 123 after going up to 135. But once you break that barrier, historically, I think all but one nation in history has collapsed monetarily and defaulted on their debts within 7 years. And that's a pretty big history. We've got a lot of it, thousands of years of it. And, I'm a big fan of Battlestar Galactica, and cycles, right? All this has happened before. All this will happen again. It may not happen the exact same way, but it's going to sound awful close. And so it's for these reasons, and it's because of the historical analogs, and it's because of the cycles that I think we can really anticipate what comes next. And I think part of that is a big cyclical boom in commodities. I think as the market starts to accept a secular bear market, and people start getting genuinely scared, I think people are going to start being afraid to make any new investments here. I think a lot of people are going to miss out on this next leg up in commodities. I feel very strongly about this. I see a lot of evidence of it. I see a lot of people waiting for just absolute catastrophic nosebleed levels, and in the case of commodities, I'm not sure you're going to get them. There's really no recipe for that to happen, right? If anything, these higher interest rates are going to drive the prices of these commodities even higher. The underinvestment's going to become even more underinvested, excuse me. And this is all going to get worse and worse and worse. And I think in the case of gold and silver, this is the gold and silver space. I think we are on the precipice of a major moment broadly on a macro scale. And I think it's going to cause a lot of fear and panic and uncertainty. And I think that this will be a big driver of the gold price. In particular, if you consider the original sell-off in the S&P in the broad market, okay, that started, what was it, in May, right? April? Everything sells off in those kinds of environments. And then part of it is because of over leverage. Maybe you own gold stocks and you don't want to sell them, but you got caught with your pants down, so you have to sell these assets because you're getting liquidated. Well, after we've already gone down this wave once, and we are still near rock bottom levels here, I don't think that anybody ever got back in. I don't know who could possibly be in right now that would need to get out on the next move down. I think in the case of a lot of these commodities, all of these kind of bad apples in the cart, you might say, are still out. I don't think any of them got back in. I don't think that these sectors are over leveraged at all. I think that they are primo ripe for the taking. And I think we're about to see the biggest launch pad and price, skyrocketing price that we've seen in a long time. I am extremely confident in this. The more I look at the macro situation, the more I look at the charts on a technical basis to see where we are historically. You look at some of these charts, guys, and some of these big gold and silver names like Agnico Eagle or First Majestic. You have to go back to 2015 to find levels of being this oversold with this much breadth that we have. Okay. So just to put that in a perspective for you, the charts on the technicals are doing the same thing now as they did in 2015. All right. That's the last time it happened. And in 2015, at that moment, they started a massive bull run, a massive leg up. I mean, some of these silver equities, were up 500-600% in a very short period of time. And we are putting in those same technical indicators now. And so when you see this with the confluence of what's happening globally, when you see things breaking, when you see people in Europe paying, $1,200, $2,500 a month for electricity, this is insane. This is about to break. I don't give a crap about the Fed anymore. They can say what all they want. I don't care anymore. It's time to pivot from the Fed. Their little horse and pony show is over. Their narrative is washed out. Whatever momentum they have left to do whatever else they're going to do, it's baked into the cake. So the move that we're going to get in the markets from his last little speech there, I think that's it. And Chapman, welcome up, buddy. You can take it from there.
All right, well, I'm gonna thread the needle here in between. I think it's was thought, process, and yourself as far as like where things are going and like what the recovery is gonna look like, however long it's gonna take. I have a bit of a different take on the monetary system. I happen to just think that essentially inflation is essentially a function of the lack of energy. And I base that solely on a historical perspective, of course. Just as you look throughout history, um, you will find that essentially anytime you have an energy crisis, you seem to have an inflationary crisis. And I just think that basically, along those lines, essentially a dollar is of course it's a claim on a credit of energy. Essentially, it's sort of in a lot of ways how it works, in my opinion. Anyway, there's a lot of debate there, but more to the point, essentially, the long and short of it is that the recovery is going to take as long as it takes for Western policy makers and in regard to that, the ultimate power in Western policy makers, and that is the people, to decide that they've had enough of it, to basically stop with these delusions that you can run on soft energy. And what I mean by soft energy, I mean like wind and solar, and the idea that we're going to have some miracle batteries that are just going to magically appear out of the air and it's all just going to save us all. Just sort of this nonsense. But yeah, I mean the thing is that if you take a look at the investment in the energy space and just the fact that there's just basically been none. I mean, we're just sort of getting for all intents and purposes here, the last bit out of the existing wells in, let's say, Permian or the traditional sources of energy in the OECD, and basically by that I mean North America and Canada. And it's going to take some time to basically get new sources of oil. It's going to take some time to build out nuclear. It's going to take some time to basically, make up for, well, frankly, lost time. And that's going to be your period of pain. Frankly, that could be as long as a decade. Absolutely. It just depends on, when the change starts to happen, when the bullshit stops. I mean, when you stop canceling pipelines, when you stop playing these stupid games, when you stop allowing leaders to basically self-inflict wounds upon the economy. It's just a matter of, unfortunately, more pain is required. Because, we live in an age of essentially climate change frenzy, where we somehow think that, the planet's been hot before, folks. It might be a little hot again. Humans are very adaptable. Nature is very adaptable. Life is very adaptable. And people seem to forget that, but unfortunately it is what it is. We have a lot of people throughout the world, a lot of leaders that are very genocidal. I think we have probably, this is going to sound like a bit of a hot take, but You know, we have more genocidal leaders in power in the West than we have ever had throughout history. What do I base that off of? Well, you have Justin Trudeau, who's wanting to basically cut nitrogen use by 30%. That's going to kill millions of people. You have the second largest food exporter in the world, this is the Netherlands, wanting to basically cut nitrogen, I don't know, in half. That's going to kill billions of people. You know, they literally want to just basically make what we call the third world, perhaps even areas in the OECD that are not as well off, into essentially just disaster zones. This is just, you know, Malthusianism, anti-humanism that has, you know, the recipe of this disaster that we are, you know, entering here fairly soon is just the Malthusians, the people that thought that, you know, we were, you know, the planet was about to die, or we were going to run out of food. All of this freaking nonsense. They just found a new thing to, you know, anchor their anti-human, anti-people, just, you know, people that wish they were born a whale or something. I don't know. They just don't like their lives, and they want to bring everyone down into them, everyone down with them into their misery. And yeah, so it's going to take some time, and there's going to be some pain points. The best thing to do is, you know, listen to people like Liberty, listen to people like myself, listen to everyone else that's telling you, prepare for it. Try to make some money on the stupid decisions of others, because that's how you survive. So, and with that, I'll yield the floor.
No, well said. That's all true. It's a real deal. And, you know, if any, you know, everybody always says, likes to preface what they're going to say with, you know, I'm not a conspiracy theory, but go ahead and say it. I mean, you know, a lot of these quote unquote conspiracy theories are just the raw truth, and you shouldn't be ashamed to say your opinion, regardless of what other people might think of it. That's how you spread. That's how you spread the truth. You got to open your mouth and speak it, and you got to speak it boldly. You got to be offensive with it, right? That's the basis of my name. It's the Liberty Offensive. You got to be offensive with your freedom. One of which, maybe chief among them, is your right to speak and to speak freely. And so speak and be heard as loudly as you can, and be proud of your opinion, whatever it is, and don't be ashamed to say it wherever you might be, because that is what liberty is. It's not some written right on a piece of paper. No. That's not what freedom is. The liberty is the execution of your freedom, which is a personal decision. Nobody gives you that. That's inherently yours internally. Only you can have. A good example of why a government or anyone else cannot give you your freedom or take it from you is the decision to die on your knees, or die on your feet rather than live on your knees, right? That is a decision to be free, despite the consequences of what might happen. That is your decision, because freedom is always a decision. And the only way to spread freedom isn't to nuke, drone strike the Middle East, right? You don't drop bombs of freedom. That's not spreading freedom. Installing puppet democracies, that's not freedom. Freedom is a choice. Freedom is the execution of that choice. And freedom is an inherent birthright given by God. And the proof is your own decision to consciously act on it, regardless of those around you. And the more readily and willing you are to speak or act in an environment that opposes you or your own intrinsic view of freedom is the scale by which you can measure just how free you really are. So how free you are is totally dependent on you and the extent to which you are willing to go to execute your freedoms. So you never have to preface anything here in the Liberty Offensive. This is not a safe space. Enjoy your freedom. Speak boldly and loudly, whatever it is you believe. Absolutely, positively. But look, this crisis, it's real. It's real. Things are breaking. And, just like Chapman said, this could take a decade. And I think that it very well could. Again, go ahead, Bitco. You want to go? Go ahead.
It's been said that he who has the gold makes the rules. Well, Russia and China have most of the gold, and the West is in trouble. Like you said, we've got a food crisis, we've got an energy crisis. Thought process was talking about 2008. That was mostly because of a real estate bubble. Well, now we've got the everything bubble. It used to be when stocks collapsed, bonds would go up. Well, bonds are going down, stocks are going down, real estate's going down. Precious metals, silver is 40% of its high. It's been manipulated by the banks. The banks basically, I believe, now are net long. And typically, when you've got a boom in the precious metals, it goes parabolic at the end. And we've been in a boom for a couple of years, and I think we're going to be several years more. But at the end of this, silver and gold are going to take off.
I agree with you. I think it's an inevitability, and I think it's also an opportunity. And I think every time the market gets something wrong, which I think they have been doing in the case of precious metals, I think it's it's an opportunity. Like I said, I think that the market has been buying the narrative that the Fed was going to stop inflation. This is all transitory. It'll all equal out. We just got to ride some tough times. There'll be a soft landing. And he just came out and finally admitted, you got to understand this too. Can I put something else into perspective about Powell? It was only his last meeting when he alluded to how soft they might be able to be. And then he comes out and does what he just did. Look, listen, you cannot take these people seriously. It's purely narrative. He didn't even make a speech. He read off of a piece of paper. It was all pre-scripted and planned. Right? He didn't take any questions. He went in there to do his damage and he got out. It's all narrative building. That's all it is. All right? That's all it is. And when you learn how to distinguish these things, right, the reality from the narrative, it empowers you so much to see through all the bull crap. It applies to everything. It applies to absolutely everything. It really frees you. Chapman, were you about to say something, buddy?
Oh, what was I thinking about? Oh man. I was actually thinking to myself that, because they're basing this off of lagging indicators like employment numbers and things like that, as to whether, now he's basically taken off the gloves because it's all the bad news is essentially at this point probably gonna come out after the election. So.
Yeah, well, these job numbers are real funny, and we have a declining participation rate. And, it was actually, I was listening to Peter Schiff, and I think it was the Wall Street Journal that actually figured out where some of those funky numbers came from. So you had this huge Six Sigma beat, and it didn't make sense how you could beat like that with a declining participation rate. Well, it turns out that a lot of the people who are working remotely, they're taking second full-time jobs. They're taking so these people are pretty much gaming both of their employers essentially. And so people are using this freedom to kind of game the system. And why not? I mean, this is something you should actually expect. In retrospect, it should have been obvious that this kind of thing could happen. But you put people in their corner with all these rising costs, and they're going to do whatever they can to keep their house, keep their car, feed their kids. And so it doesn't surprise me at all to see this. It doesn't surprise me at all to see this. Go ahead.
I'm sorry. I'm trying to remember being told not to interrupt spaces, but I was thinking about this. You mentioned something earlier about people who buy the maximum that they can buy as far as the payment goes. I did not do that actually. I specifically bought this house that I live in now based on just the fact that being able to actually afford it on one income. That was and not having to have two incomes to support this house. That was the thing for me. And when I refinanced this house, when I did, when rates were so low, I went for a 20-year instead of a 30-year. I could have lowered my payment quite significantly. But hey, I hate debt. Oh my God. And I wish other people had that same feeling. But
Amen.
because it's like, hey, the thought of like, well, hey, I might own my own house by the time I'm 50. I mean, that was the American dream, and you know what? I'm gonna make that happen. So, but yeah, it was something I was thinking about. So, anyway.
No, good for you. I'm debt free, and when I reached that moment in my life, I was extremely proud. I overcame a lot. I paid off my own student loans. I did it in 6 years, and look, since I got debt free, I've stayed that way, and it really does empower you. It really empowers you so much not to be in anybody's pocket. It is the best feeling in the world, and I will do everything in my power to stay that way as long as I can. I think it's admirable that you did what you did, especially taking the 20-year. That was a wise decision. But see, you're an accountant, you're a CPA, you get this stuff. You understand debt, you understand balance sheets, you understand how this works. But unfortunately, most people don't. Most people get fluttery hearts when they look at their house, especially their first one, and it's got just that right tree outside, and the backyard has just enough space for your dog, or whatever. It's got that pool, or whatever people want when they go pick out their house, especially their first one. And they got to go get it. But especially over the last couple of years, they really didn't have a choice. You had to get as much loan as you could get. Otherwise, you wouldn't have been able to buy a house. Prices were running away, right? It's like, you were getting priced out. You had to get that loan anyway. No, I think that's very real. Each state is different. But in the case of Texas, I think it's a really good example as a base case of how you can anticipate people over time. These things, look, just like the electricity rates we talked about, they're not going to hit everybody at the same time or for the same amounts, right? It's like the longer you go on, the worse it might end up being for you, right? Well, in housing, it could be the exact same way. This is going to hit people at different times, and you give it enough time, it all cascades together, and you could see people being priced out of a mortgage that they bought. Because remember, people buy the monthly payment, right? That's what you buy. And so the monthly payment you bought is now hundreds of dollars higher, right, as the price of everything else has gone up. So that payment you bought that you thought you could afford, you can no longer afford. You see things start to crack in the system. Somebody won't get their money, whether it's the bank, the mortgage, or the bank on the car note, or whatever it is. But you can see how these quote unquote surprise shocks, right, could really take place and start to cascade and build up. But yeah, but there's I don't know. By the way, if anybody else wants to come up and say anything, go ahead, Chap.
So as this is the gold and silver space, I wanted to know if anybody here present had an opinion on Adriatic metals.
No, I had looked at them in the past. I think I had tried to buy their over-the-counter at one point, and I was unable for some reason. I don't remember. It's been a while. I know the name. It was on my list at one point. I could do some TA for you and pass it along, but I can't tell you the nuts and bolts of the company, unfortunately. I'm sorry. Maybe somebody else can. By the way, anybody else wants to come up and talk about anything. If anything you see out there in the macro, any opinions on what's going on in the East and Ukraine, or domestically with the Fed, or expectations in the economy, you want to talk gold and silver stocks, if you have any questions about any of them, projections, recommendations, whatever it might be, feel free to request to speak and we'll bring you on up. I kind of wanted to address the student debt forgiveness, largely because it's going to be massively inflationary. And a lot of this, Biden changed a lot. And I don't think people appreciate how much has changed about this. So, for example, I came across some new data. I was actually listening to Peter Schiff on Spaces right before, Locals, excuse me, right before I come on. And he had pointed out some things to me that I had not heard yet. And I went and did some digging, and this is worse than I thought it was. So just to put things into perspective for you guys, so you know, and by the way, before I talk about this, I recognize and appreciate that this might be a touchy subject for some people. I got into my first ever Twitter spat the other day talking about this very subject. people feel very strongly about this student debt forgiveness. And I will tell you that I know firsthand that the entire process is predatory. The whole thing. Student debt is a trap. It is seldom explained to the borrower. They very rarely understand the risk that they are taking. Now, that is their own responsibility. I mean, you are an adult when you can sign paperwork to get a loan, especially after you've received a formal education. So there's no excuse for this. There's no excuse for it at all. But I can appreciate that it is a predatory system and people fall into the trap. All right. So before I say anything, I just want to let you know that there might be some people in here that may benefit from this, but I have no feelings whatsoever about people who may or may not benefit from it. I'm just talking about what happened in and of itself. All right. So with that out of the way, I'll go ahead and say that, first of all, this is a massive moral hazard. Beyond anything else financially or economically, this is a moral hazard. This destroys all concepts of risk and personal accountability. Okay. So first of all, let's go ahead and talk about what changed. Okay. They made some big changes to the income-based repayment. All right. So this is where you pay your student loans off based on your income levels. Okay. Well, in the past, which is how it was for me, if you only had to pay 10% of your income over 150% of the poverty level, right? So whatever the poverty level is, you go 150% more than that. And then once your income is beyond that, then you have to pay 10% of the excess, right? Well, that's changed. Okay. Now it's 250%. Your first 250% of your income has no bearing on your payments whatsoever. And instead of 20 years until it's forgiven, it's now 10 years until it's forgiven. But not only that, not only is your first 250% of your income not applicable to how much you have to pay, but instead of having to pay 10%, you only have to pay 5%. So they almost doubled the income cap, right? And then they halved the liability, right? In both terms of percentage a month and in terms of time. So if you're a single person, you make like $30,000 a year. Well, you pretty much have to pay nothing, all right? There are plenty of people out there who will have zero payments, or almost minimal payments, and have their obligations wiped out. These people can simply make it by paying almost nothing for 10 years and have their debts wiped out. And this is why it's so inflationary. First of all, this is a massive windfall for colleges, all right? Because now you have more students qualifying for more money with less risk and more guarantees from the government. All right. This is a moral hazard. Not only that, but the government's going to take on more debt and fewer revenues. And this is going to be on their books as a source of revenue, by the way. All right, remember that. And it could very well not even get paid back. So this destroys the concept of risk, of personal accountability. I mean, why would anyone going forward have any intentions on paying these debts when they see the precedent? I mean, anyone who understands the system is going to game it. I mean, why would you not game it? I mean, I've got a buddy of mine that told me, I've been waiting on this for 15 years because I knew they would do it. I mean, it just goes to show you. So as you have more people qualifying for more with less risk and more guarantee for the government, the cost of tuition has to go up. It's going to go up. I mean, that's when college tuition took off in the first place, was when the government got involved. There's a direct correlation to the cost of tuition with the government's involvement. And you see people making these false equivalences. Like, you should be okay with this and just be charitable. It's like, look, taking money from me by force and giving it to someone else is not charity. It's like charity is just like the acceptance of risk. It's a personal decision. It's like you are not charitable for supporting the redistribution of wealth, just like I'm not uncharitable to not support bailouts of individual risk. Right? That argument makes no sense. And this entire thing pisses me off so much. Hey, Gnostic, how you doing, buddy? I just see you walked in. Feel free to come up if you'd like to speak. We're kind of ranting about the student loan forgiveness here. But, you see people, especially, well, I won't go there, but you see people sitting on a high horse, like they got something done with the student loan forgiveness. And, I'll reiterate, you're not a good person for spending someone else's money, and you're not charitable for redistribution of wealth. And, they make these false equivalences like, well, you'll go on roads you never use and hospitals you'll never visit or police in another state that will never protect you. It's like, no, it's not the same thing. I can drive on those roads if I want to. Just because I don't drive on them doesn't mean I can't drive on them. And if I visit those cities have police that will still protect me when I'm there. I will enjoy those same benefits, right? It's like these roads didn't make the choice to take debt. They're the result of it, right? Right. They're the asset that we got from it. But the people getting bailed out for producing nothing are the exact opposite, right? It's the exact opposite. Go ahead, Jeff.
Well, I think to add to your point, like you had through essentially, you had an input in those roads. You had input in, because oftentimes those things are on much more so on the local level. But I mean, ultimately, the issue here is that really it doesn't solve the problem. You can't just say like, okay, well, we've kind of screwed up on this, America. So we have to, do something about this student debt crisis. It is a crisis. It does cause a bit of a problem in terms of economic mobility. I get that. Fine. But don't just pour gasoline on the damn fire by basically allowing these institutions that have frankly gotten rich, have huge endowments now, and keep raising tuition. The cost of education is just, it's all just gone through the roof. It makes, I sit back and I'm just sort of aghast at sometimes, like, where's all this money going? And for what? That frankly, you have an institutional system, these institutions that, what we used to call the gift of education or the liberal arts degree, wasn't really about telling you. Today, these are institutions that tell you how to think, or tell you what, no, sorry, let me back up. They tell you what to think, okay? It used to be that liberal arts education was all about telling you, or teaching you, really, how to think. And that was different, Yeah, you would be exposed to all sorts of different ideas, like, you'd go have a geology class, or you'd go, learn about the weather, or take psychology, or do a little bit of philosophy. Yeah, you were never going to use these things later in life, but, it was all about, just giving you that exposure and teaching you how to think. And these days, it's just, these are just sort of, I don't know, just laboratories where they, sorry for people in the room, but they find out how many genders exist. I hear we're up to 32, and I don't know about that, but so it's. I think the issue. I'm dancing around the bush here, and going on way too long here, but it's just it didn't solve anything. This is like going back to exactly what you said at the beginning. Like all of this has happened before, and it's going to happen again. Because you're just going to have another, just another round of this, 15 years from now, Anyway, I yield the floor.
No, I agree. You know, I had somebody tell me, well, go ahead, Gnostic. I'll let Gnostic come up. What's up, buddy?
Oh, I'm in complete sympathy with what Chapman was saying. I posted a something in the nest, which goes back a little bit further to say, you know, the problem the problem here that's being discussed is an endemic problem that has been used for a long, long time to sit down and do things. So they, you know, people can't go to school. Liberal education is good. It causes people to think. It adds to democracy. It adds to people's ability to sit down and think about the government, everything else. Well, the problem is neither in the educational system nor within the universities do they really want people to think. Because if you think, then when something doesn't go right, they go protest. So if we want, if, and I put the big question mark if in a whole bunch of question marks, and please go look at what I posted in the nest to see where that if comes from. If your actual goal is not to have people causing a problem, and as an employer, I really don't want people questioning my management and my processes and what I do. So I'm somewhat guilty of hiring people that have been through the education system because then they're nice little workers that go to work 9 to 5. And I have to live with the conundrum of the guilt involved in how they got there in the first place versus how I think people really should be educated. So the difficulty is when you start looking at the education, or the general population starts looking at the education as something that is a good thing, which contributes to society, builds society, and makes the world a better place. But that starts to change through initially the education system, and eventually the people who went through grade school and elementary school have a different attitude about, well, we should feel like everyone else should contribute to what other people do. I mean, I went on a date the other night with a Mexican lawyer who's up here in Vancouver, where I'm from right now, because she's not feeling safe in Mexico anymore because of all the kidnappings. And her attitude towards what happens to some of the socialist issues up here is she's just aghast. She's going, oh my God, that's stupid. If you do that, then the ultimate consequence is it'll just get worse. And you look at the education system, and what we've done is we've made people feel like they're entitled to different things for not necessarily working for it. The work ethic has basically been removed from people. And that it is, if you look at what I posted in the nest, is essentially what one of the efforts was to do, is to make people get rid of the work ethic and the sense of responsibility. And that's been going on for a long, long time. Paying down student loans is just the latest round of things. I've had people working for me in New York that had such burdensome student loans that they basically couldn't get anywhere. They didn't get the best education. They didn't get the best, you know, anything to sit down and do with it. And if you go to school and you get a technical education, then you're really getting a universal university education. You're getting a job education, not in a mental advancement education in which you become a better person. The idea of university is to theoretically beforehand make you a better person, a thinking person that could go in and analyze all of the stupidity and all of the idiocy and everything else that's going on. Now, as Chapman was alluding to, it becomes a place where you're basically converted into an operating socialist that expects to be given things and granted things. But you come out the other end of it, and as somebody who employs people, you kind of go, holy, pardon my language, insert there, blank. What are you expecting? You're expecting to make more than anybody else in the office for doing a tenth of what other people in the office do and complaining about it on top of it. And it's stunning. There are more people I can't hire simply because they have that expectation. And you kind of go, you know, here's blunt thing for you. I have a teenage daughter who is in for a shock of her life when she actually goes out and has to work for stuff because she expects stuff to be given to her. And she goes, well, that's your responsibility as my parent. No, my responsibility as a parent is to make you understand that you're supposed to be out there and responsible for yourself and working for yourself and sort of instead of earning it. Pardon me, not instead of earning it, but earning it. And you think it's supposed to be given. Well, anyway, I'm getting all overdone in excitement like Chapman did, which is kind of funny. It is aggravating. And when you go and pay them off, the moral hazard that builds up, just like Chapman was saying, it's going to happen again because they'll do it with something else. They did it in 2006, 2007. They did it in the teens. They did it now. They're doing it now. They're paying off the debt. And I don't entirely disagree with paying off the debt, because the universities just put up the fees and they made more money. I think there should have been some restriction to say you can't put up your fees for people on an ongoing basis, but the fees to go into the universities basically rose to the same degree that they allowed the loans to be done. I mean, this is just ridiculous. Why doesn't the government just give the money to the university and allow the fees to stay the same, or to give it to the university and allow the fees to be free like they do in Germany? Not that I necessarily agree with that, but you should get a better education than you're getting there. I went back to university after I'd been out for a little while just to fill up some blanks and get some education. And I was astonished at the stupidity that was being lectured at there. And, I would go and sit in class, and I'd get some of my staff to go in and start feeding me research as the professor was lecturing. And it just turned into a massive argument sometimes. It got to a point where I had a Columbia University professor arguing with a professor at the university that I was going to while we were in class, and they were sitting down having a debate. I thought it was the most educational thing I'd heard. The professor said, if you do that again, you're going to be kicked out. And I said, I learned more in that class from that professor than I did from you. I should just drop out of here and go back to Columbia, because what you're teaching is garbage. And he's like, what? I said, what you're teaching here is just plain garbage. And that's what the guy from Columbia was trying to tell you. You're not teaching education. You're not teaching how to think. You're not teaching a history of philosophy or political education or anything else. You're trying to proselytize me into your point of view, and you're marking me and grading me according to that. And if I don't follow it, you're going to fail me. Well, frankly, I don't give a shit if you fail me or not. I'm here to learn. And if you fail me, I will challenge you to the board of directors of this university. Don't be stupid. Teach. Don't proselytize. But you can't get it through to them because they think this is the right thing to do. And again, I would reference anybody to listen to what I put up on the Nest. Bauer did a really good job of gathering all this stuff together. And I think it's one of the nexus points of the weakness that's being developed in the system. But right now, every answer has, like, you feel guilty about the answer at the same time because it was wrong to do it in the first place. But solving the problem is just as wrong as doing it in the first place. And how are you supposed to get out of the mess? Anyway, I don't have an answer to it. I just, like Chapman, just become tongue-tied at trying to express my exasperation.
All very well said. And I think that key word there, too, was entitlement. And I think you're exactly right. These kids feel entitled to their education, entitled to their job, entitled to even the respect. They feel entitled to respect for finishing, their degree in this, junk science or whatever it is. And the world's unfair when they don't get it. And then they end up with this debt, and they have no good income because they have no real skills and talent. And it's a problem, and it's in this point, and it's in this way that they're not they don't add any value to the system. They become a burden on the system. And again, as I had kind of mentioned up front, I understand there might be people in this room who may have benefited from this and whatever, but there are plenty of people who are benefiting from this forgiveness who needed it, quite frankly, because they had made bad decisions, and they're a burden on the system, hence the need for the bailout in the first place. Shake and Bake, what's up, buddy? You want to come up and say something?
Yeah, I mean, it's actually appalling that, something like this is happening right now. I mean, when I graduated, I worked my ass off, got grants, try to keep a high GPA. I mean, with this now, it's just kind of saying, you know what, you're there's no pain, you get a reward. I mean, do we need a lot of people in women's studies, or do we need a lot of people in philosophy at this point in this economy? I just kind of feel they're taking away that that reward, that pain and reward. You go through a lot of pain in order to feel that in order to get that reward, because nothing in life is easy at this point. That's my 2 cents.
Exactly. If you think about parents who may have paid cash for their child's tuition, the benefit of that was not having to pay any interest on debt. You just kind of pay the outright cost, right? Well, now you're a sucker for doing that because you can take the loan, pay a little bit of interest, and then not pay any principal. You can get $137,000 to chase a PhD under this new plan and not have to pay anything up to 250% of your wages over their poverty rate before you have to start paying anything. And even then, you only have to pay 5% of your income over that 250. And if you don't pay it off within 10 years, it's forgiven. This is insane. Go ahead, Gnostic.
Well, I would argue with Shake and Bake about philosophy degrees, because I think that a philosophy degree is one of the few things left that you'd actually think about or enable you to think. I took a course in university where the professor, the course was purposefully chosen in the sense because it was essentially a study of socialism and communism. And the professor was teaching Marx, and I loved it. I mean, oh my God, Marx explained capitalism to me in a way that none of my business profs explained. And it was clear, concise explanation that was just stunning. I enjoyed the course immensely. And I read through Marx. I'm going, oh, well, here we get Marx, there's Adam Smith, there's this one, there's this one. You know, I just took off like crazy. The irony was he ended up showing up in one of the business classes the next year as a professor that was going to give a lecture on socialist economics. And he walked into the class and was introduced to the professor's best student in the class, me, and was stunned and was just looking at me going, but he was my best student. And I looked at him and said, yes, and thank you. I appreciated it very much. I really didn't understand capitalism until I took your course. Once I took your course, it was clear as bell as what capitalism was. And I was a lifetime capitalist and have been ever since. The poor guy looked like somebody just punched him in the stomach. And I didn't really understand it because I thought the purpose was to get an education and understand things. He thought it was to convert somebody. And oh, he converted me into a full-fledged roaring capitalist, the likes of which he hadn't seen since. And, you know, I was eternally grateful for what he did. And he was really confused because that's not what he thought he was there to do. So philosophy, history of philosophy, all of that should teach you how to think. The problem is, I think I was the only one in about 10 years of his class that actually took it for what it was. And I enjoyed it immensely. So I'm not entirely against philosophy. I am against philosophy, you know, when people are socialized into thinking that, you know, a bunch of stuff is wrong and this is wrong. And the difficulty with paying off the debt and charging the debt is now everybody's caught in a bind because university fees have gone up and they won't go down. And the difficulty of an expense of going to university has gotten so high that now people have to take out the loan. So now it's become legislated into the system. How the heck do you back away from that socialist creation now? And I think that all of the shock of having the government actually sit down and do it, you know, like you said, Liberty, I understand people needed it. Yep. And it was really depressing people and they couldn't get ahead in the economy and they couldn't do the rest of it. My issue is it was wrong to do it in the first place, the way that it was done. But now that it's become endemic in the system and wired into the system, how the heck do you get out of it so people realize that entitlement is not the way things work? I'd just love to find a way to get out of it. And I haven't heard anybody actually express any way to get out of what's happening now. And piled on top of that, I mean, here's my guilt conundrum. I make money analyzing exactly how these people are going to operate and think, and then invest in the appropriate areas to sit down and profit from them. So I'm profiting from their failures to sit down and do things. And I don't necessarily feel good about it, but it's now become wired into the economy such that I have to do it and figure out how I can profit from their failures. And I think this mess is just going to become worse and worse and worse. And, you know, Chapman and I have had discussions about, you know, how you sit down and deal with, you know, various economic repercussions of all of this that's going on. And I mean, if they don't figure it out, the poor kids in university are just going to get crushed by the debt and all the rest of the stuff that's coming.
Right. And this the socialist indoctrination that you speak of in the schools is not by accident. I mean, it was Lenin that said, "Give me 4 years to teach the children, and the seed I have sown will never be uprooted." Chapman, what you got? We'll get you next bit.
I'm going to be very brief. I did not know this about Gnostic, but I just want to say that this is the first time I've heard someone else understand the actual point of reading Marx, which is, most people just have no understanding of like what Marx was really all about. He was just essentially all he really did was just write a critique of capitalism. And I've said this to other people before in the past, sometimes, not very often, but I've said that if you're actually going to be, a good capitalist, you should actually just go and read Marx, because it makes you a better capitalist. Because, it just allows you to basically navigate some of the more, sometimes where it just, sometimes goes off the rails for every now and then. But whatever Marxism is, I don't know. It seems to become the boogeyman, but I think it's the boogeyman because just nobody's actually read it. So anyway, that's all I've got to say there.
Bitlaw, you're welcome to speak. If you got something, bud.
Excellent. Yeah, thanks for bringing me up. Just a few points. First and foremost, I agree with a lot of the sentiment that was discussed about the importance of philosophy degrees and how they teach you how to actually think. Especially when it comes down to things like conditional logic or whatnot. I remember when I went and got a JD, they told you, our goal isn't really to teach you the law, it's to teach you how to think and think like a lawyer. The biggest skill that I ever got from that was to how to actually, look at different arguments, look at different ideas, fact patterns, apply them to the law, and do an intelligent, reasoned analysis based thereupon. And that's an invaluable skill, that you can apply to a whole bunch of different aspects of everyday life and markets even. Now, with respect to the cost of universities, I think that a lot of people don't really consider the alternatives, which would be, starting out at a local, junior college or state school, community college, getting your prerequisites out of the way, for the first 2 years, paying, a couple $100s per credit for those credits, and then actually transferring up to a more specialized program and then getting the degree from that university or that program. And that would ultimately cut a lot of the costs, a lot of the fluff that people otherwise spend on these bloated university degrees. With respect to profiting from others' failures that Gnostic noted earlier and the guilt experienced thereupon, I think it's important to understand that there's two sides to every trade. And at that point, you're really profiting based on their inability to actually put in the work to realize what the most likely outcome would be from whatever that trade is based upon. And ultimately, the market's going to reward people that put in that hard work. And to the other point about how the universities nowadays are just more likely than not focused on indoctrinating these kids. I don't know if you guys are familiar with Yuri Bezmenov. He was a Soviet KGB defector that came over here to the States in, I think, the mid to late 80s. There were a number of interviews with him that are very, very, very enlightening. And he pretty much laid it out. The goal of these systems, communism, socialism, in large part, is subversion, ideological subversion. And I think what we're seeing nowadays, especially as it pertains to the universities and the Mockingbird media, they're literally subverting the culture, breaking down. I mean, you saw it with the beginning of, Johnson and the Great Society, where they broke down the nuclear family and then kind of, made people in lower income families beholden to the welfare state. Nowadays we could see it with a lot of this woke ideology being imparted to these kids. It's literally sociological subversion, where they're inverting a lot of these, fundamental values, particularly as it pertain to the nuclear family and just kind of base level morality, and flipping the system on its head and turning it against it. So I don't know what you guys have to think about that.
I think you're spot on. I think you made a lot of really good points. And a level of accountability that I think that we should have is that I'm actually willing to go as far to say that, some of this is on us. It's actually our fault for allowing it to get this far. I think a lot of, you might say, right-minded people, right? Politically to the right, they tend to have the tendency to, mind their own business and, don't tread on me. You do your thing, I do mine. And they tend to be quiet and not speak up, where these more radical leftists are as eager as they could be to scream as loud as they can the feelings of their heart and their mind. And, you don't see the right do that. And they're allowed to kind of take over the system. I mean, this is what they want. They want to do these things, and it's allowed to happen because no one opposes them. And so I think it's really our fault. I'm 36 years old. A lot of this stuff existed before me, but that doesn't mean I don't have a role to play to prevent it from going any further, or to be very bold, right, and loud with my opinions, to do my part to change the narrative and to change the minds of other people, and to change opinion and sentiment, and to get involved, and, at the local school level, or whatever it might be, to turn the system around. Because obviously it's not going to happen on its own, and talking about it in spaces is not enough. We got to go out and do something about it. And so I think it's really healthy to recognize what we're talking about here. And everything you said, I think it was spot on. But nothing will change if we sit on our butts. I think this is a time more than ever, with everything going on. It's a clarion call to action, I think. This type of thinking, this type of philosophy that we might have, that we've been talking about, right? Maybe this different opinion than what's being expressed in these universities. It's time for this to be spread boldly. Go ahead, Chap.
Okay, so as far as game plans for how you change these things, I'm always a little bit cautious at the deployment of necessarily like conspiracy theories. Now, granted, I have not seen this thing that Gnostic has said yet, but or posted up in the nest, and maybe I'll change my mind once I take a look at that. But I would say that within the universities, you most likely, just supposition, or it might be supposition, I don't know if I'm using this is just whatever I think. You have two different groups. Okay, you've got the administrators that are just trying to make the money, and then you have rank and file professors that are also sort of getting that money, and now they have decided to view it as their mission to essentially indoctrinate, people. It's like, they've morphed the whole thing of like, we'll teach you, how to think. Well, in order to teach you how to think, we have to teach you what to think, and that's a bit, well, they've got it all cattywampus, and I think that's a very thinking and understanding about that is that it's very important in how you would tackle changing the system, because you just have to understand there's one half, the administrators, that just don't care about the indoctrination. Look, they just want to increase student numbers, and they want to increase fees every year, and they want to sell more football tickets depending on the school, and they want to have a new gymnasium or whatever else, and they're going to have, gender neutral bathrooms, of course, because you can't do that. can't not have that these days, and so there's two sides of that, and then so that's I think a fairly major that's an important understanding in how you would essentially go about reforming that system. So anyway, other than that, I just agree with everything said.
Feel free, buddy. Go ahead, Bit.
Yeah, for sure. Kind of, jumping off on what Chapman just said. Uh, I agree 100%. These universities, they don't teach people how to think anymore. They teach people what to think. What we have is a generation of kids with an absence of critical thought, that are essentially unencumbered by the thought process. And I think that you can really see no greater example of that than what these kids are being taught in Common Core curriculums. It's like I look at my kids when they're in this Common Core stuff and how they teach them math, and it's absurd. I mean, they have to go through all these different processes and procedures just to do basic arithmetic that I was taught to do at its base level form. And now they have to go through all this crazy shit in order to pull off these, functions that they need to do basic arithmetic. And it's like nothing I've ever seen before. And then, I guess even further, when it comes to the grassroots organization of some sort of alternative movement to push against these themes and narratives that have been thrust upon us with all this woke ideology. I think a lot of with Liberty Offensive said about complacency. I mean, it can't be more true. I think people just got complacent. You just want to live your everyday life. You actually go out and you work, you support your family, you come home, you're tired. You don't really have that much time, effort, or energy to actually, sit down and, think about the things that are going on in the world and do any sort of, analysis, much less actually, do any sort of organization to push back against it. But I think that, and I said it, after this recent election cycle, things need to get worse before they get better in order for people to really realize what's at stake and what happens when you just kind of set things like personal liberties and freedoms aside. And I think that we're actually starting to see that play out. And now we're actually kind of starting to see this kind of grassroots movement of people waking up and realizing, okay, hey, this is what we need to do in order to push back against this shit.
Right. And I think it's very important to understand that there is a divergence in the definition of freedom and liberty. Leftists tend to
Oh
think
my
of
God!
this.
Only a technician or technical guy would say that. A
No,
divergence. Sorry.
There's a split between views on what liberty and freedom mean to people. I think leftists tend to have a more collective view of it, and the right has a more individualistic view of it. And this is why it's important to speak out, because we all have the same rights on paper, right? We all have the same First Amendment. We all have the right to religion, the right to free speech, the right to assembly. Okay. But leftists use all of their rights more than the right does. They talk more, they assemble more, they gather more, they plan more, and therefore they get more results. And so their view of what freedom looks like wins over time because they use their liberties. They use them. They use them more often the way that they see them. And they're always spreading them. And just like any priest, right, they go out and spread their message, and then they get new sheep to the flock, right? Because that's how it works. That's how it works. You have to be offensive with your beliefs to spread them on to others. And I think the right has been complacent, and people mind their own business. They go to work and they go home, and it's like, live and let live. Just stay out of my business. I stay out of yours. And, they have slowly taken over everything. Jabroni, welcome aboard, man. What's up?
I just figured I'd jump on. I saw you guys are doing this, and I kind of last couple minutes I've been listening, so I apologize. Still off. Like, if we get to a terminal level, man, like the chaos gets to a certain point, it will revert back to individual. So yeah, this can consolidate to a point where the warring between like liberties and rights. But man, like you go to certain parts of the world where there isn't a very strong federalist system. Like I don't know, man. It's a little bit of white pill. You know what I mean? Like just. I know we all get negative about this shit. It sounds like most people in here are sort of similar, but I would say that if this continues the way it's going, and certain, like you see what's going on in Europe, I mean, we'll go back to this kind of every man for themselves, and you kind of go back to your own kind of Bill of Rights at some point. So, I mean, don't get completely hopeless out there. Just focus on what you can control, and get competent skills and network with people who are good. So anyway.
Hey, Carl, you had requested to speak. You got anything to say, buddy, or you want to pass the chat?
Yeah, hey, you guys hear me?
Yeah, sounds good. What's up, buddy? Welcome up.
Hey, I'm kind of, new to the gold and silver space. I don't currently have any money invested, and, I'm pretty familiar with uranium. I know the players. I want to start getting involved in gold and silver, I just kind of don't know where to start. So would you guys be able to put things in perspective, like maybe make a recommendation, like what would be the equivalent of a Cameco, in this area, and how? And then my other question is, when you're looking to, invest in a gold or silver company, is it important that you can actually take delivery of like the physical, or is that not so important?
Can I help first?
Please, Jim, would love your input.
All right. Hi, Carl. Carl, if you don't have you had metals at all ever in the past? Any exposure?
No, not really. I've had a couple of just like miners, but nothing that I bought because I was informed about it. Just things I bought because I, maybe saw it on a Reddit forum or something.
All right. If I can help you with an opinion, I'm a futures broker, and you mentioned deliveries. I would encourage you to start with physical metals and maybe some mines of, some producers, gold mines or silver mines, something like that. I would encourage you to stay away from futures if you don't really have any experience in it, in the past, recent past. My own opinion on futures, I think gold is near the bottom. There might be $50 downside, but I think there's $300 upside. In silver, I think there might be 50 cents downside, but there could be $5, $10, or $15 upside. That's on the price of the silver. So if the price of the silver starts going up by $10, $12, $15, just about any producing mine that you buy will likely make money. I'm not licensed to talk about stocks, so I don't want to talk about stocks. There's other people in the room that might be willing to do that. The reason I asked you about your exposure in the past, that I would encourage you to stay away from futures when you don't have any experience in it. Go ahead.
I can add on to that, but first, Jabroni, you had your hand up. You want to add on too?
Yeah, I've mentioned previously, I'm very hesitant to give you like the specific names or like, stock recommendations, but, obviously the biggest like blue chips would be Barrick, Newmont. Those are big companies. You're not going to probably see quite the amount of upside, but they're the most solid plays. If you wanted to get exposure in that way, I agree that with Jim that, maybe getting a little bit of physical, but the biggest component is like you got to understand why you're getting into the space. Like, what is the reason why you're drawn there, and like understand like what your horizon is, what's your kind of parameters for it. Because, I mean, I myself got into silver prior to the silver squeeze, and there's so much exuberance, I guess, in there. You get kind of like a GME ape level kind of group kind of thing going, and then it fails completely for years, and then you get like totally washed out. So just like understand why you're doing it. And I actually really do like physical because of the fact that you kind of sequester some of your assets into a physical thing, and it just sits there. And as long as you have the self-control to be like, you look at this thing and just say like, well, fuck, I guess I was wrong on the timing, but I still believe in it. Because I have some silver, man. I'll be honest with you. I bought some silver early. I'm very much up on it. And I bought some silver. Like, this is going to be side money that I'm never going to touch until whatever my thesis is out. Then go for it. And I think that would be very free doing your whatever.
Jabroni, we're losing you, buddy. Your signal's choppy. Hey, Jabroni, if you can hear me, buddy, you're kind of choppy.
Okay.
You might be able to have to find some better signal.
All right. Well, then I'll just withdraw. I apologize, man. I'm at the literal window.
No, it's okay, buddy. No, we heard the first half of your spiel. It was really good. And just to touch on that, if I may say, Shake, I saw your hand up. We'll get to you. I don't believe in FOMO. I don't believe in fearing into anything. Okay, I don't. I don't preach it. I advise against it. But I will tell you this: the premiums on silver right now, in particular, are high, and what's likely to come next is probably going to drive them higher. So, if you're interested in acquiring physical metals, my advice would be to get started. Get started now. Not only are the metals cheap, especially silver. Silver's down, right? Silver's down. It's getting beat up right now. And if you're ever going to start accumulating, it is right now. Now is the time. Okay. The premiums on gold don't fluctuate too much, so don't worry about those. Though I do agree with Jim 100%. I'm a big technicals guy. All right, and I believe in combining fundamentals with the charts. And I can tell you that we are at historical levels on the gold chart. We are testing over 10-year trends here, and there is a lot of confluence here of support in the near term on the backdrop of everything that's developing globally with everything that's happening in Europe. I think we're on the precipice of something. And I think that just to reiterate one more time, if you want exposure to physical metals, you better get started, buddy, because it's about to ramp up. In the case of some good equities to own, my favorite producer personally is Agnico Eagle. I think they have a very good long-term outlook. My number two recommendation would probably be First Majestic. It's an excellent company with excellent ownership, with excellent resources. They got a lot of flack for their Jarrett Canyon, and it's turning into an absolute gold mine. They keep finding new discoveries. It keeps growing their asset. I mean, they're turning this thing around. I mean, they are making fools out of everybody who doubted them. Once these prices of gold and silver go up, the leverage on First Majestic is going to be unreal. And if you're looking for a more risky play with some upside, I can recommend Minera Alamos. Minera Alamos is a high upside play in Mexico, so it's relatively safe jurisdictionally. It's a great asset. They have one mine already online. They are permitted for the second. They really don't have a whole lot of headwind. It's just a matter of time and exposure to higher metal prices. They're well on their way. It's a relatively safe attempt at a 10, possibly 20 bagger, especially as you approach 3,000 gold. Those would be my three recommendations for you. Shake, what's up, buddy?
Just a quick question. I tend to hold some spot gold. I mean, do you usually buy the bullion, or do you buy, like, for example, the gold eagles, or any specific country, like the Australian mint or the UK mint, or do you just buy bullion at this point? Thank you.
When I first got started, I only got eagles. Over time, when it came to silver, especially, I started going for ounces. So I would get more generic rounds, and then I had a pretty long phase of doing that, just stacking ounces, right? And I took a break from it for a while, and then got back in, and then I decided I wanted some exposure to Britannias, and then I picked up some Cougarans, and so now I I have a pretty nice collection. At some point you can kind of have fun with it. It's kind of nice to open up the war chest and have all those doubloons right in there, right, and all that diversity. It's really pretty. It feels so special, and you can ting them together and hear that silver bell sound. It's real. You can hold it in your hand. And I love physical metals so much. It's really a personal thing. I mean, there are pros and cons to both. Obviously, you pay a premium for the Eagles, but I can tell you when I started stacking Eagles, I never paid more than maybe $3 premium. And there were plenty of times, plenty of weekends and special events, I'd get them $1.50 over spot. And that has worked out for me quite well, because as these premiums have gone up, they have paid for themselves multiple times over, because a lot of dealers give you well over what I paid for my premiums on those Eagles. So that does say a lot. So, if the premiums were to skyrocket again, it stands to reason that the Eagles would go up in value even more so than the generic rounds, which would probably be only worth spot. Go ahead, Jabroni.
All right, hopefully I'm on Wi-Fi, so it's a little better. You guys hear me all right?
Now you sound great.
All right, cool. Yeah, so to that point, man, like the premium thing, what I was trying to say was, unfortunately, if you're late to the game, I mean, late, quote unquote, and you have no physical allocation, it's kind of sucky because, part of there's a debate in like the precious metals, sphere of like, okay, do you own it physically? Do you have it in, some sort of storage? Do you just buy, some sort of securitized allocation? I think that, you definitely, most people want to have a little bit in there, and you're just gonna have to pay the premium, unfortunately. But the other part that is a good option for silver, especially because it's such high volume, PSLV is supposedly, a pretty good 1-to-1. Like they have allocated silver like 100%. So you can still get like the perfect like liquidity angle from owning a fund, but that's actually backed up in private vaults. So, like I think my personal belief is that after a certain level of like precious metals allocation, you want to maybe like kind of get that extra bump from the ability to kind of liquidate out. Like if you have like your body weight in silver ounces, like maybe go from there. That's my recommendation personally. But and then there's like the whole aspect of, I'm kind of curious what you guys think about this. How do you guys break up by gold and silver as well? Because I have my own kind of system I do, but I would like to maybe kind of expand this out to you guys. Like, what do you guys do? Do you have a mixture of both, and how do you break that up?
Could I help an opinion there?
Of course, Jim.
Okay, it's my opinion. I'm a futures broker again. It's my opinion that if you look at a metric, it's kind of like a teeter-totter if you vision it that way. And on one side of the teeter-totter is gold, and on the other side is silver. What I'm getting at is how many ounces of silver it takes to buy an ounce of gold. Right now, it's about 90 or 91 after this last week. So I would think that silver is cheap to the price of gold. So I guess that I would say that right now, Jabrani, if you were going to be putting new money to work or first time money to work, I would think you'd want to buy the cheaper one right now because you get more for your dollar, more ounces for X number of dollars. And then if that silver gold ratio can come back down, some people call it a gold silver ratio. It's really how many ounces of silver to buy an ounce of gold. If you can get that down back under 50 or under 40, then you might want to trade some silver for gold at that point because it's getting closer to something that mirrors normality. So that would be my opinion, that right now silver is cheap to gold. I would be putting money in silver.
I agree, especially getting started. Silver's a lot easier to get started with, even despite the premiums. Like you said, the ratio is 92. The all-time high is about 127 or so. It's pretty high. It's relatively undervalued. And on the next move in the precious metals, silver historically is always pretty violent in its moves. And so it tends to have more potential for upside. For somebody like me, I've been doing it for a while. So I just kind of take turns I'll just look at the chart and, kind of play it by ear. Maybe something catches my eye and I decide I kind of have more fun with it now. I kind of just go out and do it. But getting started, exactly what Jim said, I 100% agree. Katz, what's up, buddy? You're up.
Hey, just kind of wanted to say something about, how the American Silver Eagles and so on, they have higher premiums. When I was kind of getting into investing in physical silver, I found the best way of doing it would be by pre-1964 U.S. coins. So, for example, Benjamin Franklin half dollars, Mercury dimes, and so on. Those proved to be, lowest premium to buy them. And then, at times that I have sold off, you pretty much get the melt value for them. Just for holding a lot of it, it does get kind of tricky because, it's not exact ounces. So, you might want to have an Excel table just to calculate it out. But pre-1964 silver is what I like to deal with and might be a good option. So that's all.
That's a nice suggestion. That's something I did actually. Just along my journey, I was like, well, what do I get next? And I thought, I'll get some junk silver. So I bought a good deal of that, up substantially, by the way, since then. it's kind of surprising sometimes when I check up on it how it performs relatively, but there's definitely a strong market for junk silver. People really appreciate that stuff, and it's really a niche market that some people just can't get enough of it. Jim, go ahead.
Also, if I could just address Carl one more time. Carl, it pays to shop. You can Google, or I use Bing search instead of Google. But if you want to just shop for online silver, people to call and ask, get some phone numbers. And as people are saying, you can shop and see, you can look at their websites. And it's okay to look at bars too if you're a first time guy, because bars, the premium might only be, $3 or $4 an ounce over, rather than, Philharmonics, I heard, are less than Maple Leafs, and Maple Leafs are less than Eagles. You just have to decide what you'd like to have, what you feel comfortable with. And a room like this is good to ask, but maybe you've got a best friend or some friends that you play golf with or tennis or something like that, that maybe they're a little further along in silver than you are. Ask them who they've used, who they've been satisfied with.
FindBullionPrices.com has a good list. It's a good way to start. I would still look at other options, but it's like FindBullionPrices.com, and they go through quite a number of websites, and they find like the lowest of each type of gold and silver, bar, coin, whatever. So like that's a good place as like a baseline to look at, and you can go from there.
Everyone, remember, if you'd like to come up for anything whatsoever, questions, comments, chip it in, feel free to raise your hand. We'll bring you up here. Gold and silver spaces, all about it, includes the macro. It kind of opens the door to talk about anything, because that's part of what I love about gold and silver, is talking about the miners themselves or the macro that deserves our attention in the space. I mean, it all really ties together. It all comes back to money, and gold and silver are money. Go ahead, Jim.
I've got one macro comment for folks in the room. The US dollar, I believe it was on Tuesday, inched out a high for the year just by a couple of points, and it's closed lower than that high the rest of the week. So there's a potential for that dollar index. If you look at a chart, the DXY, some people call it, it's US dollar index. If it was a double top, and we're going to be lower from under that 90 level going forward, then that's another macro indicator that possibly gold can do a little bit better as the price of the dollar comes down.
Jim, I'm glad you brought that up. So I'm looking at the chart right now. As you had alluded to, it did make a double top, and I can tell you on the daily time frame, it looks like it has a little bit of strength. It might try to do something a little crazy in the short term, but on the longer term time frames, the technical indicators are telling us that it wants to roll over. It's showing weakness on the RSI. There's a lot of divergence here, and that tends to play out pretty well. It does look like it is potentially topping on a longer term pattern. So again, on the short term time frame, we might see it go sideways or a little bit more up, but on a longer term time frame, it does look like it wants to roll over, which alludes to your point. I do see. This is just one more element of confluence. This is one more. Everything's coming together, and me personally, guys, I can see it. I can see everything coming together. We are at the precipice of something, and the markets know it. The markets are always ahead of this stuff. I just see it. Whatever the hell it is, it's on its way. And, I think we could look to this energy crisis. I think we can look to Europe. I think we could find the cracks in the system. But I think a domino is already kind of teetering over here. Go ahead, Jim. Okay, no worries. But again, the confluence in things like the dollar, the technical strength of gold and silver on the backdrop of these fundamentals. And again, it's not just in the gold and silver space, it's in commodities. I see the same thing in a lot of agriculture stocks. I really see, to an extent, some in uranium. I think uranium had a blowout day earlier this week, and it really kind of jacked up its chart a bit. It looks like it was an overblown move, and so it's going to have to rest and sell down for a bit. But everything else is still trading in confluence, and it's all setting up for a major break. I'm not trying to cause a panic or alarm or anything. I'm trying to tell you what I see, and I think the time for urgency is here to prepare. And look, I'm not afraid to tell you. I have no qualms of telling you that I'm preparing in every way possible. I have food storage. I have precious metals. I have allocation to lead, right? I have, we actually bought another freezer, and I am slowly just accumulating things because there's a lot of increased inflation baked into the cake of these food prices, especially as these reduced yields in crops come. All right. And some of this has to do with the fertilizer. Some of it has to do with drought, but it's on the way. And it's all baked into the cake. You have increased cost to feed livestock in the feed. And so you have cattle and, pork that are, still growing, right? That are getting these increased inputs that we haven't even experienced yet. And I don't think that that's paranoia. I think that this is facing reality. I think that this is exactly what's on the way. I think we still have time. I don't think you have to go FOMO and use your credit card and go buy $1,000 worth of meat and, spaghetti or something like that. But just like we accumulate equities, just like we accumulate metals, I think you should consider accumulating some other goods just in case you get into a jam to be prepared. And just an example of that is, I tried to warn my friends about this pandemic coming, all right, because they were telegraphing it. You could see it in China. I mean, you could see this thing coming a mile away. A mile away. And I was trying to tell people in my life about this, and I was accused of being a fearmonger, and I was paranoid, and I was afraid. And just for the record, just so you know where I stand on this, I want you to know I have never gotten any kind of a jab, and I never even got a test, but I still prepared for it. I still prepared for it because I knew when it came, it was going to be big. I knew it was going to shake markets. I knew it was going to change the world. I knew that it was apparent especially because I watched all that video coming out of China. And I think what I'm seeing right now globally is the exact same thing. You can see it coming a mile away. And that's why I titled this the way that I did. I want to ring the bell. It's a clarion call to prepare. It's not fear porn, it's preparation. And preparation is the ultimate level of freedom, guys. Look, when you have insurance, you don't have to be afraid because you're insured, whether that's the precious metals, whether it's the food, whether it's a water filter, whatever. Once you have it forever. A lot of the stuff doesn't go bad, right? So you can invest in it once and just have it. You can just have it, right? And then you don't have to worry about whatever happens. You can live free. You can be free. You can be fear-free. Right? I fear no man. I don't care if they inflate this thing to hell. I don't care if they deflate this thing to hell. I don't care. Jesus Christ could return in a cloud of glory, and I would be ready for that too. It doesn't matter what happens. I'm ready for it. And that's the kind of clarion call that I want to make, is just to be ready, mentally prepared. Because look, preparation is not only in terms of physical goods that you can go out and buy and say, well, if this happens, I have this. Sure, that's important. But perhaps more importantly is the mental preparation, the anticipation of what comes. That way, when it happens, you're not shocked. You're not frozen in fear, right? Because how could you be? You anticipated it in advance. It's like all those people who just had their jaws on the floor when they started cutting off baseball games and football games when that virus came. It didn't surprise me whatsoever. I was telling people it was going to happen, right? And that's the difference. These people lost their minds because it caught them by surprise. But this doesn't have to catch you by surprise. You can see it coming. You can prepare for it. As an adult, as a grown man, for yourself, as an individual, for your family, whatever. You take whatever precautions you think you need or don't need. But that's my message to try to help do my part, something I feel boldly in my heart that people need to hear. And this is kind of my way of just kind of ringing that bell.
Could I please ask if anybody in the room has any other questions, maybe on futures markets at all, that I could maybe help them understand or answer a question? I
do, Jim. So this is something I actually ask you every week, so I hope you don't get tired of it. But it seems like every single week you see more and more news about gold and silver leaving vaults. And so the LBMA has had massive withdrawals, and it's kind of making the rounds again this week on the last couple of days. Can you speak to some of these physical inventories leaving?
Yeah, I guess that, it's rational common sense if you stop and think about it. We've been talking the last 15 or 20 minutes about the premiums, how high the premiums are in silver. And the gold premiums aren't percentage wise as high because the price of gold is that much higher. But if you just stop and think about it, if you're a well to do man or a well to do woman, and you see you've got six figures, let's say, that you want to invest in something, the cheapest silver and the cheapest gold are at the COMEX right now. There's no premiums by definition. You can buy, September's going to start delivery this coming week. The August futures in gold, the deliveries month to date, they're going to end, I believe, Monday, I think. The month to date deliveries on gold are 33,000 contracts delivered. Silver is only like 1,030 or 1,040, something like that. But August isn't a big contract for silver; it is for gold. But in answer to your question or your idea, Liberty, it's the cheapest silver. So of course, people are going to take delivery of it. It behooves them to take delivery of a futures contract at zero premium right now, because you've got the day you take delivery. And how delivery works is it's based on the day that you bought your futures contract. That's the price you locked in. Well, silver, I mean, it's cheap on the futures exchange, and that's what people are buying. They stand for delivery and they're getting it. And the day they take delivery, the day that their cash is traded for the silver, the short gets to decide that. If you bought it Friday at the close, you paid like $18.70. So that's why people are doing it. And you'll probably see more and more and more as people are finding out about it. They're turned off by $13 or $14 over for a silver eagle, and they're turned on by the fact of no premiums, buying 1,000-ounce bars for $18, $19 an ounce. That's the reason.
So if that keeps going, can they replenish the silver? I mean, is there a way that, this is not a big deal? Or if this keeps up at the rate of pace that it's going, this could turn into an oh crap moment?
Well, you have to understand that for the majority of the people, it's a trade. Okay. Now, that said, the majority of the traders, it's a trade, but there's some companies that buy and they use it up. And that company might be an electric vehicle manufacturer. The richest guy in the world owns an electric vehicle manufacturing company. Another one might be photovoltaic, solar panels. They need silver. Aerospace needs silver. So in those instances, the silver probably isn't coming back. But for people in this room, they're buying the silver as a trade. And some people might say, I'm going to have it forever. My kids or my grandkids are going to benefit from it. But the bottom line is, if you buy it at 20, you might sell it at 30 or 35. So that silver, in answer to your question, that silver can come back. The other thing is that it's a two-way trade by the bullion banks. The two-way trade, the first leg is they buy the silver from the mine that they've got a contract with. And then the second part of their trade is they deliver it to a speculator or a trader on the COMEX by going short, and then they deliver the metal. So they take the silver in from the mine and they put the silver to an investor at delivery time. So it's easy to understand or logical to assume that as the future goes by, another month goes by, more silver got mined from the mines and got put to the bullion banks that put it to the COMEX. So the inventories do fluctuate. They go up and they go down. But your question was, Liberty, why are they going down? And they're going down because of the draw from big speculators or funds that are taking it off the COMEX at little or no premium.
Very good, Jim. Always appreciate it. Anybody else got a question for Jim? It sounds like he's sounding off. He's a good guy to ask questions. All right. If anybody else wants to come up, absolutely feel free. You're all welcome. Anything is allowed. It is not a safe space. Speak your mind, speak your heart.
I'll add a little bit. I think it would be interesting to see. Silver is very industrial metal, and there's people who debate about whether or not it is still a kind of a commodity now, or if it's still a monetary metal. The people who are looking at 200-ounce silver and things like that, like I feel like that is maybe a little optimistic in our time frame. That is debatable, so I'm not going to say either way on it. But what I would say is I personally believe that the industrial aspect of silver is still kind of running the narrative, and the narrative is what runs the value. So, maybe people should temper their expectations with the performance for silver. In worst case scenario, you're pleasantly surprised with the returns, but I err on the side of gold. But some things you could look at would be if we start to see systemic shortages. I know there's several posts that Wall Street Silver's put out where, tweets about how there's been a deficit in production on silver globally for the last few years. I think 15 was the last time they had a net positive um, silver production. So, as these supplies are eaten through, in theory, you'll have less silver. Therefore, just the stock to flow will make it go more positive. But I think everyone should be more patient with the metals, especially when you're not dealing with like a leverage play, because of the fact that there's a lot of financial interests that have a benefit of kind of suppressing this sort of volatility. They don't want to see a GameStop scenario with silver. That would bring way too much attention to a space that the powers that be have basically sufficiently suppressed for generations. I think there's a lot of money, there's a lot of political interest in suppressing any attention to this space. So to expect a crazy, run up to triple digit numbers is aggressive. That's my read on it. So,
Jabrani, could I please ask you, could you easily see it though? Would it be your opinion that could easily see 28 or 30 or 34?
yeah, absolutely. I think with inflation alone, we should be there. And then my point is, I think there's been so much securitization in this space that people like. One of the things that I always kind of try to focus my own criticism on myself on is like, are my assumptions being very like biased emotionally? And I think like the problem with a lot of, you see in crypto too, is a lot of people really start to believe the narrative, like why they're doing this. The banksters are running everything, the corporations, like whatever, the government. And like it's like you need that sliver of hope. And like investing doesn't work that way. So like we should be, in my opinion, well beyond 50, but that's just not the reality. Like, so you cannot like it. I don't like it either, but we're not there, So the worst case scenario for me is like a bunch of new people come on board, they buy into this thing, they start to do the research, they get excited, and they're just beaten down, and they're just beaten down for like a generation. You lose another generation of people who would otherwise be in, kind of believe in the space, they learn, and they would invest accordingly. I don't want people to have false hope. Like, I would much rather have a bunch of people cautiously buying physical silver and then maybe buying PSLV or a couple miners and just doing stuff like that and having realistic expectations, because I think there's so many vested interests right now in preventing people from getting these crazy gains. They're okay with it. They're okay with shitcoins making people a fuck ton of money and then dumping, because at the end of the day, it discredits any sort of alternative to the traditional finance model of just everything goes into indexes. We run the books, and then you get a cut if we decide to. That's the way they want it to be.
I share your opinion, Jabrani, and I'm kind of how I kind of treat the markets is that's kind of my target. Let's say $18 at right now. maybe 28 to 30, 32, and then we'll watch it. And if we start taking out 34, then you watch it closer, and maybe it takes out 36, and you just watch it and you act accordingly. But that way you're an informed, on top of it investor. But in no place on my Twitter have I said, $500 silver, $300 silver. I'm much more realistic. I'm certainly, we were $30.20 in February of last year, and we could easily do $26, $28, I think, and then we watch it closely. I just wanted to see if you were sharing that opinion. Thanks.
And I mean, like I'm a sales guy. I'm in finance. I'm not an expert here. Okay, so like anyone who's thinking I'm like gospel or a pro, like I'm not. But I mean, you could probably find tweets from me from like Silver Squeeze and before that are just complete contrary to what I'm saying. I'm not going to go through and delete shit. I don't do that. What I'll say is like it's been a learning experience. That's where I'm at right now. I could be wrong. Everyone has to decide where they're putting their capital and how they're going to, commit to it. That's the number one thing. If you can't a year from now be totally wrong and still be at peace with the way you invested, then you gotta learn, you gotta grow. That's all I can say. I mean, this is a personal development journey for everybody here. It doesn't end, so just like make peace with that. You guys are all working to better yourselves and invest. Like nobody should be looking at everyone else here like they're preaching the gospel. That's my advice to everyone here.
Good advice. Go ahead.
I'd like to just come back on, and 15 minutes ago, the statement of the night was made by Liberty when he said Jarrett Canyon turned out to be a gold mine. That's a pun well intended, and that's the statement of the night as far as I'm concerned.
Yeah, thank you. It is. It's a big deal, and there's a lot of valuation there. And First Majestic's one of my larger personal positions, and I add to it when I can, especially on news like that. It's a big deal. This company is going to rip, and it has the benefit of both the fundamentals of the company itself and the narrative, because the narrative is, when people go look for their first company, First Majestic tends to be one of them that they find. It has a bit of a cult following in the gold and silver community. I mean, people love Keith Neumeyer, and so it probably will overshoot its fundamental valuation anyway. It's just probably going to happen. I mean, when you look at the Silver Squeeze, look at the companies that did best. I mean, AG went through the roof, far and beyond what anything else did. It's just a testament of what you can expect next time. It's proof in the pudding. But what a great company. What a great investment. I'm a big fan of them. Can't get enough of them, to be honest with you. And they're at substantially oversold levels here, historically riding trend lines that have always resulted in big turnarounds. This is a pivotal moment in the equity. Let me pull it up right here.
And so, $3,000 gold will really help that gold mine that they did buy too.
Absolutely. Absolutely. I think they're about 50-50 gold and silver now. But again, to find the same kind of technical levels that we're at today, right now, you have to go back to 2015, the end of 2015, to find this kind of confluence on the support trend and the indicators. And the last time it was here, it made a rally of, let's see, I'll tell you, 683%. And this, by the way, has confluence with other equities in the space like Agnico Eagle and even Newmont. And when you do technical analysis, this is exactly the kind of stuff you're looking for. Exactly the kind of stuff you're looking for, because it's sector wide. It even branches out to other commodities like uranium. You would not believe the way gold, silver, and uranium have been trading together. And for me, it's made it very easy. Surely made it a lot easier to navigate these markets and anticipate bottoms and potential targets to rebound or roll back over and test, because they're all trading together and they all share similar points of support and resistance at historical times. And it's really fascinating to watch. I don't think that this is a coincidence. I think that this is a setup for what's next. I think that these moves are being generated by big big investors across the board, and they're accumulating. They're accumulating for something big. I think it's clear as day. It's in the charts all day long. I could not be more bullish on gold and silver. It is my favorite sector right now by far, far and away. Far and away. Again, if anybody else wants to come up, you're welcome. Feel free to speak your mind. Questions, comments, miners, equities, bullion. It's all allowed. Price projections, targets. It's all fair game.
Hey, Liberty, what do you think about streamers relative to like mining companies?
So yeah, Alex is usually here, the co-host, right? You know Alex, and he's big on the streamers. He likes them a lot. And the thing about them is that they are more of a safe play. Now, we had on Don Durrett and got his opinion on them. And his opinion is that, yes, at first, they're going to accelerate rather quickly. They pretty much just print money. They don't have really any costs, right? They just take in cash flow. So fundamentally, you would think that these would be the best to play on really high metals prices. But guys like Don Durrett actually think that this will work at first, but this will actually become a point of contention later. Essentially, these equities, these producers are going to start saying, look, I'm getting screwed on this deal. You're getting all of the money at these high prices. We need to renegotiate this thing. And of course, that they'll say, too bad. This is what you signed up for. And I don't know if that could end up equating to anything or not. It might work in terms of market narrative and maybe fear around certain companies. I don't know. But fundamentally, I think that they make a lot of sense. I mean, it's kind of a really logical play. There's very little risk. There's very little downside. They don't have to spend much money at all. I mean, they simply just collect royalties. The biggest gold play of all is Franco-Nevada. They're a royalty company. And there's some good up and comers too, like Metalla and Sand. I mean, these guys are super oversold, by the way. So if you're looking to get into a royalty play, I would actually recommend one of those because they've got good ownership, they've got good teams, and on the charts, I mean, they're begging to be bought. Quite honestly, both of them are.
Yeah, that's kind of my sentiment as well. I have Metalla as the up and comer. They got more torque, I guess. And I also have been long time in Wheaton as well as Sandstorm. So I think my view is that you add a little bit of diversification and sort of take advantage of that securitization trend in what is typically exploiting the mining companies and the metals prices as a whole. The streamers sort of allow you to sort of tag on the narrative, the banksters, like the exploitation of the metals prices, right? So I think anybody who's going to be in this like heavy, where they're going to be spending quite a bit of time and energy and money on this space, like that's a huge aspect. I don't even know if there's an analogous like kind of company in certain other commodities, right? I don't mean, maybe there are, I'm just not aware of it, but like I don't think there's anything like that in uranium or something. Like it's kind of like a unique, maybe I'm wrong, but I agree with you there. You want to have like there, and also maybe you have some more, you guys have more of that on this, but like I do think, like, just from my experience with mining companies, it's something that you really shouldn't be long term on. Like there should be parameters which will like require you to sell some or all of your position. Like this is not the industry to be doing blue chip set and forget, so that's kind of my read on it. And I don't know.
Yeah, right on. I can say that there is one in uranium. It's URC, Uranium Royalty Corp. But nobody ever talks about it. And it's actually something I've wondered too. It's like, why does nobody want this royalty? But I'm wondering if it's because the uranium sector's small. Maybe they haven't had a lot of opportunity to write checks, right? Like in the gold and silver space. So maybe that's why it's not so attractive over there. I actually don't know, but I do know it exists. But the market is giving us a lot of opportunity here in companies like Pan American. They're intentionally hitting the production on the lower end of their expectations, right? I mean, why would they produce more when prices are this low? And so because of this, they have reduced earnings on top of higher all-in sustaining costs. And so today's quote unquote problems within the company are giving you a really big discount. Personally, I'd be looking at them at $14 or about $15.89 right now. I think they might actually go down there. But this is the kind of thing where, today's situation won't exist tomorrow. And the market's really just going these insane discounts that this company has no business being down here. But the narrative is giving it to you. So got to take it when you get it. Sir Wicks, welcome up, buddy. What you got?
Hey, thanks for bringing me up. I just had a quick question. Just looking into also investing into miners at this point, just how beat up the sector has been, just see a kind of bottoming here, or very overextended. What's your guys' thoughts on like the factors that will move these higher? Three sectors or three, like a couple things I'm looking at is the U.S. dollar pulling back here. That could help. Oil being lower, that I think helps the revenues, if I'm not mistaken, as well. What other factors will help this turn around if we do see one here? Obviously, the price coming up of the metals as well. What's your guys' thoughts on that? I just jumped in a space recently. Thanks.
So honestly, I think the next big driver for gold and silver will be two things. One, it will be the acceptance of a secular bear market. I think, as things start to roll over and get ugly, this is going to start to generate fear. I think gold is going to experience a lot of gains from just the fear trade alone and the run to safety. Right now, people have been running to the dollar, especially foreign nations, as they kind of have had to. This has been their safety valve as they print their own currencies into oblivion too. But the way the system is designed, they have to have these dollars to pay their dollar-denominated debts or to buy oil. And so this kind of creates a demand for dollars, and people have been running to the dollar as the Fed has raised interest rates. So we Americans may look at the 2.25% interest rate as complete dog poop, right? Especially with 8.5% inflation. But if you're across on the other side of the world, that's pretty attractive, especially when you need that currency. So I think that this paradigm is going to shift when the market realizes that the Fed can't do anything about inflation. Most of it now is supply side due to the policies that we've decided to take. We don't have Russia's resources. We're not drilling for oil domestically. And so this energy crisis is going to play out to the fullest extent. You're starting to see Europe kind of break down here. They're experiencing 10 times electricity costs. We were talking earlier about power. As a Texan, my electric rate doubled. And over time, as people come into new contracts, this kind of things are going to keep cascading. There are more and 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 more costs built into the system that some people haven't even experienced yet. And there's more coming in the future. And so as this kind of stuff takes shape and people realize that this isn't going anywhere, look, everybody's making a fuss about what Powell said. Okay. Everybody's talking about it was the most hawkish speech ever. But he said two things that nobody's talking about that stood out to me loud and clear. First of all, he admitted that a lot of the inflation now is supply side, and he can't do anything about that. He admitted that. He also went out of his way to say that inflation is reflexive, which is true, which is that the more people expect more inflation, it becomes a self-fulfilling prophecy. Okay, which is true. So if you think things are going to be more expensive in the future, you're going to go stock up on them now. I'm doing that myself personally, right? It could be toilet paper or whatever, right? Just whatever. But people do this. People begin to hoard. People begin to stock up so they can save today on tomorrow's future prices, right? So that's true. But the thing about it is he admitted it. And what he's doing, why this is significant to me, is because he is addressing that part of his hawkish tone in his approach is to impact the psychology of the market. Right? He wants to break that psychology that inflation is going to stay or it's going to get higher. But the thing about it is that there's nothing he can do about it, like he said. All right, his only power is the wealth effect. So as we go through time and more of these built-in crises kind of come into play, whether it's food related, energy related, whatever the shortage might be, this inflation is going to force everybody to recognize that it's here to stay. It's part of life now. I think once you have that in tandem with the broad market rolling over, all right, people are going to become scared. As people accept inflation, they're going to run to a safety valve. It won't be the dollar this time. Why would it be? Because the narrative now will be different. Nobody is looking to the Fed for answers anymore. They have realized that the Fed has lost the fight. And once the Fed has lost the fight, well, then the dollar has lost the fight. So I think that that's what does it. I think it's in part a fear trade. I think it's in part acceptance of a broad bear market, secular bear market. Which, if you look at the historical analogs, all of that lines out. If you look at every single moment in history when gold has started a secular bull market, it's on the backbone of one or two, if not both things. One is the secular bear market, and two is the Fed pivot. All right, and the gold and silver tend to sniff this out 1 to 3 months ahead of time. So. I guess that's kind of the answer. I think once the market realizes all the things that I just laid out here, it's going to start the next rally in gold. And I think we're closer to that now than ever. I don't think it's that far away. I think it's actually rather imminent. Go ahead, Jim.
Also, if I could just add one caveat, there's a fair amount of funds, pretty big money that trades futures that follow trends. And when the trend starts up from lower, we might get some of those funds to flip. Some of those funds might be short right now, but if the trend starts going for silver, let's say it starts trading $24, $25 and a new uptrend starts, that might add a little bit of fuel to the fire, so to speak, just put a little fuel under the fire to continue the uptrend.
I agree with that. Because I talk about often the difference between the fundamentals, reality, and the narrative. I think once gold has both, it'll be unstoppable because you'll have the fundamental basis to own the metal itself, but then you'll have the narrative also to chase it. It'll become potentially popular here, just like he had alluded to. It'll have momentum. It'll be chased, and it's going to get pretty explosive. I think that's exactly right, and I think it's all lining up. I think it's lining up pretty quick.
Yeah, thank you. That's a great answer. Yeah, I agree.
Yeah, no problem. Right on. Anyone else, feel free to come up. You're more than welcome. Speak your heart. Whatever's on your mind, it's all good. We can talk miners, talk the metals. We've actually been going at it for a bit. We might call it off if nobody else has anything else to say. Anybody wants to come up? We covered quite a bit. Well, if that's the case, we'll go ahead and call it. I really appreciate everybody coming on. Thank you for all the speakers for coming up and asking your questions and sharing your inputs. I think it was a pretty good one today. And obviously, every Saturday night, 7 Central, we'll be here again next week. So you guys enjoy the rest of your weekend. Look forward to it.
Thank you very much for the opportunity.
Always a pleasure, Jim. Thank you.